This is an ugly looking crypto chart. Don't be deceived though, everybody. This is bullish. This is extremely bullish. And I'm going to explain why in this video. And I know this isn't copium. It's not hopium. I'm not trying to just turn red candles into some type of positive situation. This is my perspective. When this happens, and this is cycle after cycle now, when this happens, it needs to be embraced. This is exactly what we want to see, and I want to break it down in this video. Now, by the way, this is an hourly chart on Bitcoin. That's precisely part of my point. This is such an emotional space. People actually see this happening, and it's an hourly, hour after hour falling, Bitcoin's down, crypto's down. They get wrapped up in the emotion. There's deception when you start zooming in on these charts, and emotional behavior takes a hold. People make emotional decisions, which are not good. But then if you just zoom out, and this is a weekly chart, it's almost like crickets. Nothing's happening, right? There's so much noise happening in the short term with this current retracement, but this chart is insanely bullish. I want to talk about the dips. I want to talk about why they should be embraced. You know that feeling when we're pumping, when we're getting green candle after green candle, and it's exciting? That same excitement, I think, should be felt when we're getting dips. And I want to explain why. I know that sounds crazy, but this is all a mental aspect, especially if you're not a trader like me. You're this multi-cycle, zoomed out, macro, long-term investor. If you're that type of person, this is important, because this whole game of long-term investing, in my view, from how I see it, requires a lot of just endurance. It really does. So let's talk about it. Hit the subscribe, hit the like. I'm going to show you exactly why dips are important. You see this messy chart. I'm going to break down some really nice data, everybody. It really puts things into perspective. This is Bitcoin zoomed out. First off, I just want to point this out. If you're like me, you can go all the way back here. Check this out. This is 2013. Look at that bull market. Look at those gains. We're in this position where we're just waiting. Here's the next bull market, 2016 into 17. So many gains. The last bull market post 2020 having bull market gains. If you're anything like me, and you're just anticipating the potential that these markets might actually repeat again, we're preparing for some more gains going into the next bull cycle. That journey in that yellow arrow, which really illustrates the next bull market, and also just the enjoyment of higher highs and higher lows, that yellow arrow has a lot going on in there. And a big piece of it isn't just gains. There's confusion. There's a lot of fear and unknowns. There's a lot of dips, big dips. But the only way for this yellow arrow for all-time highs to get here once again, the only way is with big dips. And I just want to show you something in terms of why the dips are so commonplace and why they are so necessary. And after we do that, I actually want to break down on this chart what basically is happening right now with Bitcoin in comparison to these moments in the last Bitcoin cycle. So I want to go to a daily, and here's zoomed out on the daily. It's a mess, but we're going to zoom into the last bull market. And I just want to show you something. It's eye-opening, especially if you're new to crypto and you're maybe preparing for what could be your first bull market. I want to show you what bull markets are made of, because it's not all green candles. Again, there's a lot of unknown. There's a lot of uncertainty. There's a lot of big dips. So in terms of where we are, you can see this red rectangle on the screen. There's the big COVID dip of the last cycle. But considering where we are from a timeline perspective, right kind of in the middle of the red rectangle, just to give you an idea, right? So right here, last cycle, pre-halving. But notice after COVID, and we really started going into the halving, I just want to point some very simple data out for you. We're going to zoom in a little bit. Look at the volatility. Obviously volatile coming out of COVID, but just kind of getting some consolidation, explosion for moving averages, 42% to the upside. Everybody's enjoying these gains. And then out of nowhere, almost 20% to the downside, just like that, right? And for context on this hourly chart right now, just to give you an idea, let's take it from this swing high right here. Bitcoin is currently down 5%, just 5%. So let's go back to this chart. We kind of continue post-halving, 2020 halving. All right, let's see what's going on. We're getting ready for a speculative bull market. We have our bull market doors are right here in green. That's a macro Fibonacci that we track on this YouTube channel. But leading into it, we get a nice move, 35% to the upside. We're cruising now, Bitcoin back above 10,000, doing its thing, and then boom, 18% fall, right? And then this story goes on, and I shouldn't even say it just goes on. It goes on even more strongly as we enter the bull market. See, bull market doors being broken, 31% to the upside, 16% to the downside. Right after we break those doors, 130% to the upside, 30% to the downside. Look at these massive gains. And then 1, 2, 3, 4 big red candles, 30% to the downside. Many people not knowing what is going on here. But if you're ready for these moves, and in particular, we start integrating the technical analysis aspect of it. We have the 20-day moving average here. We even have the 50-day down here. In these bull markets, that's what I talk about this. I've talked about this for years. Crypto. Down here, this 50-day moving average, like an ocean. And crypto acts kind of like this dolphin, just jumping in and out of the diving in and out of the ocean, right? And every time it gets overextended for moving averages, there's that dip. And we always anticipate this. So 30% or so to the upside, 30% dip. Around 100% to the upside, 26% dip. And that story just is the story of a bull market, right? And you can even go back and we can look at the cycle before that, 2017 bull market, same exact type of stuff happening. 158% to the upside, 37% to the downside right here. 95% to the upside, 37% to the downside. And then it kept going, right? That's a dip to 3,000 and Bitcoin was still about to go to 20,000. Now, here we are right now. Once again, this is what Bitcoin looks like on the hourly. And if we scroll over now to the actual daily chart, this is what Bitcoin is looking like right now on this daily chart. This is what it's looking like. And there's so much emotion, even with just a little red dip like this. This is nothing compared to those very commonplace dips. So if we take Bitcoin on this chart and let's go to a different daily chart. Let's go to this one. We take Bitcoin and we say, okay, those dips, what were we looking at? 15, 20, 30% dips from the swing high. Well, from this key resistance, which is obviously it's been resistance, this higher high area with this bearish divergence we've talked about, down around 5%, 5 to 6% right now. Let's take this down. All right, 15%, a common move. That's $31,000. Does that scare you? Is it unsettling to think about that? Because that's normal. We just looked at the data. Let's take it further. 20%. That takes us to a $30,000 area, a very key area. And you know what? While we're doing this, let's actually integrate some technical analysis into it. Put aside historically what has happened. This is normal. If this were to happen, it might not. Right now, we're going to evaluate the 20-day moving average support, $35,000 or so. But let's go take our Fibonacci from this swing or this area of consolidation before Bitcoin took off to the swing high, and we have our Fibonacci higher low, the 618 around 31,000, the 786 around 29,000. We have this area of higher low support for Bitcoin that, put aside the historical context, these dips are normal, put that aside. From a technical analysis perspective, this is what a chart would do. Put aside emotion. What's cool is we have data, we have historical data that actually just says, hey, this is what happens. Higher, low targets being hit through bull markets, the beginning of bull markets. This is what happens. This is normal. And what that does for me is it just allows me just to say, you know what? I enjoy the green candles, but let's face it, when we get overbought historically, this thing needs to cool down. And we need to just see that, just even if it doesn't hit oversold, it just needs to cool down. And in that cooling down process, we have targets, we have support areas to watch for. In this case, we have the 20-day, which we can watch. Maybe there'll be consolidation here. Maybe Bitcoin is too bullish right now with all the narratives happening. Maybe a Bitcoin ETF comes out of nowhere, bounces right off the 20-day, right? We'll monitor the 20-day, but if that fails, we have areas to the downside, which are normal for Bitcoin. We have the 200 down here around 28,700, the 50-day in blue around 31,000 or so, and we have that $30,000 mental target, and we have the Fibonacci higher low. That's in play for Bitcoin. I want to say this, that support can even fall. Will it? To be determined, but that support can even fall on the macro chart. We have another more macro Fibonacci. Look at the bear market low back here. With everything Bitcoin has endured, it's made some nice gains. And going into the next halving, if it comes down even to this higher low area, and I'm talking about $20,000 or so, even that would be normal. Even that would be, from a technical analysis perspective, justified. And this is not hopium or copium. This is simply data, and I think it's good to be prepared with simple data, especially if you're a macro person like me and you're like, I'm here in the long term, right? I'm not trying to get in and out of trades every day. That's not what I'm doing here. And if I'm going to be here in the long term and we're talking about we can be multi-week moves to the downside, I want to understand how normal they are. I want to understand if they are normal, but I want to also understand how often they happen. We go back to this chart though. Just check this out. Bitcoin, for basically since the swing low back here, up around 140%. At this time last cycle, and what I'm talking about is when Bitcoin started moving away from these moving averages right in the middle of the last red box, Bitcoin up around 200%. The cycle before that, Bitcoin at the same time, you can see it in this red box towards the end of the red box, closer to halving, 2016, Bitcoin up 300%. So there's some diminishing returns here, cycle after cycle, but Bitcoin's doing exactly what it's been doing in the previous cycles. And just notice, there was consolidation after this move. There was COVID last cycle. And then in the 2016 cycle, going into halving, there was a really big fall for Bitcoin. And Bitcoin was really so bullish. If you look at this chart, look at the fall though. Look at this wick down to like 40% to the downside. And Bitcoin was about to absolutely explode, leaving sub $1,000 prices in the past, right? It's never been there since. And before it did something it's never done before, it had to fall 40% right around that halving going into the next cycle. And right there was uncertainty. There was unknown. There were people probably just leaving crypto thinking it was over, leaving Bitcoin thinking it was over. And then that was the beginning of an absolute explosion on the Bitcoin charts. So the downside that's potentially in play, it's normal, everybody. And I just want to say that. It's for no other reason than to just say that. The move that is potentially in play for downside. But what's really cool is we do have certain narratives that could push Bitcoin higher, right? You go to the weekly chart and we look at the weekly. I just want to make a note of something right now. Check this out. It's a higher high for Bitcoin on this RSI, right? And that's really nice momentum for Bitcoin. When you look at the last cycle at this time, what was the RSI momentum doing? Well, the momentum oscillator, it was putting in a lower high, right? The momentum is not as great as it is right now for Bitcoin. That's a good thing in my view in terms of a macro outlook. So I wanted to put that data, just a simple reminder. And obviously we have a lot to track on the daily chart in terms of what's potentially in play. We'll continue tracking the resistance to the upside if Bitcoin can make another run for it, that $37,000 to $38,000 region, if Bitcoin can make a break above it. But right now it's hovering at this support area. You can even take this trend line from this rising wedge back here. You can see Bitcoin kind of just grappling with that area right around the 20-day, all at the same time. We'll monitor. We'll see what Bitcoin does. But this is just my take, everybody. There could be more downside, but I'm thinking long. If you're thinking long too, let me know in the comments. Hit the subscribe, hit the like. I really appreciate you cruising through. I'll see you all in the next video. God bless.